Ethiopian. So, all right, I'll just start anyways. Okay, so first things first, you guys know me already. I'm RP Randolph, RP.Funded, and the concepts that I normally use to trade is ICT, SMC, which is smart money concepts, and a thing called technical analysis. Now, technical analysis is more or less just understanding the market, seeing different candle patterns, and using said candle patterns. Any questions? Okay, moving on. Some confluence that I use is a fair value gap and RFVG. It's very simple stuff. We go over here. Fair value gap is, let's see, actually, it's very easy. It's rectangular. So we'll put it's just a box or a gap left behind by a large displacement zone. So as you can see, there's a candle here, larger candle here with no wicks inside of said candle. This is a fair value gap. Another example would be over here. So we go from the bottom of this wick and the top of the next candle to create that fair value gap, and then between that we have the IFVG. So now it's currently an IFVG because price did inverse it. Since this was a bearish fair value gap, nothing too complicated. Now over here we have liquidity as well as a drawn liquidity sweep or a drawn liquidity. Liquidity sweep is pretty simple. Liquidity will be set here. Price takes the liquidity and then price returns lower, which shows that price is currently drawing on liquidity. Drawing means it's taking the liquidity and running. Then we have the break of structure. So as you can see with the way we're currently going, this is a break of structure. So as you see, price sets a high, we set a higher low, and then set a higher high. With this red line, it indicates that price went above this liquidity point and actually used it to create a new higher high. No questions so far? All right then. Now we'll get into order blocks. What's up?
No questions.
Oh, okay. Now we have order blocks. Order blocks are fairly simple again. They're the candle right before the big move. So the opposite candle before the big move. So for example, if price is going downwards in a strong rotation and we have a bullish candle before that, that's an order block. So I'll show you that. And basically price will tend to tap back into this order block before going lower. What I'll do is show you that right. Show you that right around here. So as you can see, before this massive move downwards, we have an order block. So if we grab a rectangle here, you only do the body, because if you do the body of said candle, then it's way more precise. As you can see, price taps back into this order block twice before fully moving lower, leaving its own order block. So as you can see, we can use this body instead of this body. Now this body is fairly large, but this body seems like it's way more secure. On top of that, it did take up these two highs before returning lower. So technically this was the last move. And with that, it just continues all over the charts because you'll see fair value gaps, order blocks, and there's liquidity literally everywhere. So nothing too difficult. Now we'll go back. I'm lost. There you go. Next, we have an engulfing candle. Basically, an engulfing candle is just one candle bigger than the previous candle. I'm assuming you guys know that. But I'll show you. So over here we have these. Let's see these four candles. The bearish candles could not engulf these three bullish candles, so therefore these are bigger. These are engulfing. These failed to engulf. They couldn't even close under this candle with a fifth candle. But this candle right here engulfed this previous bearish candle, allowing price to continue going lower. But what can happen sometimes is, even with price engulfing multiple previous candles, they tap into a different confluence, like a value gap. They tap into some sort of liquidity, or we have a certain market structure. So even though they engulf the previous candle, we do continue in the same direction. So you never want to go just based off one engulfing candle. You need to wait for some type of rejection or a obvious retracement before you even take a trade there. No questions so far? Hold on, give me 1 second. Alright. Now moving on. Now we have the BPR, aka the balanced price range. Again, it's a very simple concept. It's basically just a fair value gap inside of a fair value gap. So we'll go over here. This is, honest to God, pretty decent. Yeah, pretty decent BPR. So basically, as you can see, we have a bullish fair value gap here. So we'll set the box right here to the top of this candle right there, and we have another fair value gap inside of this, which is this one right here. Normally, the best ones would be ones that inversed immediately. This one didn't realistically inverse immediately, but inside of this one, price created this. So technically now, we don't have to use this fair value gap because this one seems like it'll hold the best. Then we can actually look a little bit further in between this and see how we have another fair value gap here. Even though another BPR here, because between the two you have to use you're supposed to use the smallest value gap, which can be used on higher time frames as well. Very simple. And yeah, as you can see, this is another balanced price range. I think price did tap back into here. I'll show you guys a better example later, trust me. This isn't the best example, but I have some better ones. Then we have the rejection block. I made a video on that. If you haven't seen it, it's very simple. Again, majority of the concepts that I use are not overly complicated. They just sound it, right? So we have the rejection block. Fairly simple. Let's go over here. As you can see, there's a larger wick. Actually, let's find a better one. This one right here. This is actually perfect. As you can see, there's a large wick here next to the order block after price rejected out of this order block and the fair value gap that was set here. If we use our rectangle tool again, you can obviously see that if we mark out this rejection block, that's another confluence to confirm that price was most likely going to continue lower. I guess you could call this also rejection block, but it's not really clear enough. For me, I know the size doesn't matter, but it's whatever. Also, same thing for fair value gaps. The size doesn't matter. It's just the placement of it. The most recent fair value gap might not hold the same as the latest fair value gap or the earliest, which actually I'll get into later. Now we have GS gaps. Those are just fair value gaps farthest away from structure. So as you can see here, right, we'll use this as a GS gap. Now again, not every confluence is going to hold perfectly 10 out of 10, but that's not really the biggest issue here. I'll show you. So basically, a GS gap is just a fair value gap that's farthest away. The farthest away fair value gap. So in this case, it'll be this one. If we set out the range, the top is the bottom here, the top there. The farthest fair value gap will be right here. So that means it's most likely a certain point where price might reject out of, and as you can see, price touched it here, reject, price touched it here again, and we reject out of it again. Now, but even though after we inverse the GS gap, what did price do? Price inverted, tapped back into the same exact GS gap, but now it's an IFVG. And once price rejected out of here, not only did we leave it behind a rejection block, as you can see right here, we currently have an order block at that same area. So it's 3 confluences to support if you were to take a short here. Yeah, actually, the body, but it's not going to be perfect. But I'm assuming you guys get the point now. It's very simple. So far, no questions? Alright. Now, Judas swing. Out of everything here, this might be the most confusing thing, because there's multiple different types of Judas swings, but I'm gonna go over the two types that I actually use. Right? So, let me see, this over here is a pretty decent Judas swing. As you can see, price is meddling down around here. Normally, Judas swings take out some sort of liquidity before being formed, because they're more like a V in a way. So, as you can see here, hold on. Curve this. As you can obviously see here, price hit more of a curvature upwards, more like a strong V, and that's basically what a Judas swing is. So price will plummet to a certain point, take out a low, or tap into a fair value gap, depending on where. Because normally key levels are where Judas swings form: high resistance liquidity, like high resistance liquidity, order blocks, or like I said, GS gaps from previous, because those are normally the value gaps that hold the strongest. Right? So as you can see here, price hit a nice swing. We swung lower, almost tapped into high resistance liquidity, could not seem to take out the low, and we continue higher. This would be a more of a bullish Judas swing, just because, no, bearish, because price when it started out lower and then went out higher. And then you could say another Judas swing is more or less here, where we have more, even though we have a little more consolidation before the full move, is still technically a Judas swing. Let's move this up here. Actually, we have one. This one actually isn't that too bad. This massive spike is also could be seen as a Judas swing. Not the best Judas swing, obviously, since it's kind of really narrow, but you can still use this. Yeah, you can still definitely. Yeah, actually no, it's way better than this one, because this one has way less consolidation. It was more of a confirmation. Price moved up, then immediately went lower. Yeah. Okay, let's move all the way back here. Now, we have a head and shoulders pattern. Again, fairly simple. Price will set up a high, then a higher low, then a higher high, then we have two equal lows. Or, it won't always be equal, but they'll be relatively to the same exact spot. And then what we'll have after that is price creating a new head. It's not always going to be right next to each other, but they're going to be, they're not always going to be at the same level, but they will most likely be right after the head. And whenever this forms, normally price goes lower. I've taken numerous trades mainly using this head and shoulders pattern, which is a part of technical analysis, and it has been a game changer for me. It helps me take amazing shorts majority of the time. Now, breaker blocks. Breaker blocks aren't complicated, but without that much review of them, they are kind of complicated. So let me see if I can find a decent breaker block here that you can use. I had it marked out. Yeah, we'll use this as a breaker block. Okay, so as you can see, price is creating lower lows and lower highs. But right around here, as you can see, we have a lower high, a higher lower. That's a higher low, a lower high, lower low, lower high. Then we have, it seems to be a higher low, then a higher low, then a lower low, or a lower high. Sorry. And we continue this trend until we reach around here, where higher high, lower low, lower high, lower low, higher high. With this, we normally would use this candle right here as our breaker block, and what we would do is wait for price to retrace back into it. It doesn't matter how many candles there are. Normally it would be like around 2, but 2 to 3, 2 to 4, it's not the biggest deal. You do the top of that wick, the top wick of the candles, and the bottom wick of the assortment of 3, And as you can see, price actually went back into this place before rejecting out of it. We also have a fair value gap as well as an order block in the same exact area. So it's not even a bad confluence at all if you wanted to use it. That's like 3 confluences in one area. You can set your limit at the bottom there. So far, no questions? Okay, good. Now we'll get into premium and discount. Premium and discount is basically a range. I don't have it set up on FX Replay, but I do use it here and there, just not as often as I should be. So we'll set it up the bottom of this candle to the top of this candle right here. And what normally would be here is, sorry, give me 1 second. What would normally be here is the 100 halfway zone, and then we have the discount zone. So normally discount, which is where sellers are, is actually way lower. It should be, I think, no, it should be right around, yeah, down here. For discount should be down here. With it being down here, we actually use, we actually want price to, this is premium down here. This is premium, I'm sorry, I'm wrong. Premium that's down here is price will normally come back into this area, and this is where you'd want to put your buy orders and not your sell orders, because you don't want to sell when it's low and buy when it's high. It doesn't make sense. So because premium's down here, you'd want to buy down here and sell up here in these extreme zones. I don't have it set up, so it's not going to be the prettiest thing in the world.
Wait, but one thing. Wait, sorry. I thought discount is down and premium's up.
This discount is basically price going lower and premium's going up. Yeah, I wish I set it up earlier, but I didn't set it up. If I set it up, it would be way easier for me to explain. Oh shit.
Do you use it a different way, or?
No, you're right. I'm wrong. It's just the fact that it's this right here. Normally when I set it up, I don't have to worry about all the fucking numbers that we have I have right here. Normally it'll just be my zones, and it'll be up here because you sell in premium, but you buy in discount.
Yeah.
So you sell here and you buy here, and the extreme zones are higher, closer to the high. That's it. Okay, and then we'll go to the right. Now we have HTF, higher time frame PD arrays. So everything I just explained to here, especially with ICT technical analysis, if you see this on the higher time frame, let's say the 3 minute. If you see for value gap in the 3 minute, that's a higher time frame PD array. For value gap is right here. That's a higher time frame PD array, which actually, if we go right here, you guys can obviously see that with this, price will trace back into this higher time frame PD array in the 3 minute. So we have a 3 minute for value gap that price also rejected out of. Let's go on the 5 minute. We also have a 5 minute for value gap where price could not close above, but close in the middle. On the 1 minute, if you go back to the 1 minute actually, if we look over here, you'll be able to see that same exact thing. Price tapped into this previously, immediately reject out of it. Then price tapped into the same place again before strongly displacing lower. Displacing is basically price moving strongly in a certain direction, leaving behind gaps, like fair value gaps. And that's pretty much it for my concepts and my confluences. Any questions before I get into actual trades? No? Okay. So I actually have something I realized yesterday. Let me scroll out a tad bit here. Over here. So even though we can't take a trade here right now, this is one of the trades that are perfectly in my strategy. So from what you guys just learned, it might not be as simple, but Caden or JJ, You guys want to look at this chart and tell me what we could possibly mark out for confluence? I'll let you up here speak. Based on what you just learned.
I got no fucking idea.
Are you sure? Just based off what you just learned, you can't tell me anything
I don't know.
that you see. Like you can just
No,
look.
bitch. No, bitch. Just
Yo, chill.
Oh, my bad.
Just seriously. Okay, Abe, what about you, Abe?
I'm gonna mark out the range, the highest high, and the low.
Okay.
You already marked it out, but
Yeah, the highest high and the lowest and the high and the lowest low in the range. So I'll do that for you, no problem. Simple. Okay.
did that one, yeah. Exactly. Where would I mean, I'm trying not to use my own strategy.
No, use your own strategy, man. Whatever is more comfortable for you, dude.
Alright. In that case, at 8:15 you guys change your state of delivery. I think that's a liquidity receipt right there.
At 8:15.
Yeah.
But price didn't take out the low here.
Below the
We took.
very bearish candle.
Oh, okay. So you want me to mark the lower here of this ISD?
To the right. Yeah. I mean, it closes below the opening price of that bullish candle.
Okay. I don't know why a rectangle, whatever. Okay.
The opening price of the bullish candle.
Oh. Alright, that's your ISD.
Yeah, that. Yes. Then it retraces inside of the FEG, of the bearish candle.
Got that right
And then
here.
you also have that order block. It can't close above the order block. You already have then with the Fibonacci 3 confluences. It goes lower.
Okay. That's not bad. That's actually not that bad at all. I don't use ISDs that much, but that's not a bad way of how you examined it. Yeah, I'm a little bit different. Like I said, my mostly used confluences as order blocks and value gaps as well as rejection blocks. So first thing here that I saw was an order block, right? So as you can see here, price created this order block before moving lower. Creating this low right here, taking all this liquidity. Now price currently trending upwards, but if we go over here, we actually have a GS gap, which is the gap farthest away from the previous low, or farthest away from price right in this specific range. So we have a GS gap and an order block, as well. There you go. Hold on. Sorry. Okay. So just off the rip, we have both of these. Okay. No biggie. Now, before these two confluences, we also seem to have a hold on. We have this high, price tests back into this fair value gap, this fair value gap right here, and we tap into this high, rejecting out of it. Price currently is engulfing. Price engulfed these 3 previous candles. We tested the gap in between that, which is actually exactly what you said earlier. Price is formed a CISD in this case, and we tap back into the middle. But in this case, I'll say engulfing, make it simpler. Price tapped here, could not close above the fair value gap. Even though the fair value gap is now mitigated, it couldn't close above it. On top of that, we left behind a nice rejection block. Rejecting out of the order block set here. So with that, we have a GS gap, an order block, engulfing candle, and a rejection block, as well as market structure, because we just created a lower high. We can short once price reaches a specific point. So let's say price takes out this low or inverses this fair value gap. We set our limits right around here. The next candle, once this candle closes, for our stop losses, Since price already mitigated this point, we put it right above the rejection block. Inside that same order block it just retraced out of, we use the Fibonacci tool, and which uses it's just something called an OTE, optimal trade entry. So in this case, we'll use it for our exit. Right, so we'll use the low of this. And as before we do that, before we actually fully use this, right? Let's go in the 3 minute and the 5 minute. So let's go in the 5 minute first. What do we seem to have in the 5 minute? We created that lower high. Respected this structure that was here. We did inverse the 5 minute fair value gap, but inside, well, we're currently inside of an actual different 5 minute fair value gap right here. That price tapped the midpoint of, not here, but around, but this time before, because price could barely close above it, and we immediately rejected out of it. So these two candles engulf this candle, this large bullish candle. And 3 minute, what do we have here? We have a 3 minute, more or less consolidation here before the major breakout. We're going to hourly. Or silent anything in the hourly. So basically the 1 and the 5 minute were good enough to give us enough confidence to take this trade. And since if we still use OTE, let's zoom out a little bit here. You can target all the way to 2. If you really want to, you can actually target a little bit lower than that. Target at 3, or even lower than that still if you were to be disciplined enough to hold the trade long enough. Target the 4 here, and as you can see, after price made up all these, hit all of our confluences, we went for the 4 on the Fibonacci. Let's delete it real quick and see what we get. That's a nice 1-8 RR trade, and you'd be banking a shit ton right around here. That'll be a perfect bottom tip, if you, especially if you couldn't target any liquidity. But I'm pretty sure we zoom out, you'll see that we have resting liquidity here. Yeah, as you can see, yep, there is a key level down here that price tapped into before reversing higher, and we took these. Look at this liquidity as well. We drew on this liquidity that was over here.